Hey, good morning. Let's go over today's trade plan. So yesterday and in the overnight session, we saw a rejection at that 73 to 75 resistance zone. That was the area that was identified as the main inflection point on the upside in yesterday's trade plan, and we ended up getting a pretty decent reaction there in the overnight session. At this point, heading into the open, we have support at 59 quarter to 61 quarter, and as long as we hold above the zone, it tells us that the breakout that we saw yesterday is still intact. So, this morning's video is being recorded a bit earlier than usual. So, on the econ front, we still have housing starts that are out at 7:30 a.m. Central Time. So, on that econ release, there can still be some activity. But this 59 quarter, 61 quarter is a key area. It can almost be used as a short-term bull-bear zone. And if we're holding above it, then there's potential to go back up to 64.5. And on the upside, 64.5 is the important level that the market would have to cross in order to go back up towards the gap fill and the 73 to 75 initial resistance zone. Now, in the event of a break below 59 quarter, ES can pull back to 56.5 to 51.5 to 53.5, and then buyers can be active and we can get a push back up. And break below the initial support zone doesn't necessarily mean that the market is now completely bearish. It just tells you that it's not as strong as we saw yesterday, and it can simply balance within a range and essentially consolidate yesterday's upside move. So that typically means that if we break 59 quarter, we can still bounce off of 51.5 to 53.5, and then simply balance around the initial support zone. So in that case, we would not be using this zone as a key reference area anymore, because we know that if we slice through it and we sliced above it yesterday, then this is a breakout zone, a low volume area, and essentially the market can rotate around it and fill in the volume at this level today. So that's in the event that we break down. Now, given that the FOMC meeting begins today and the FOMC announcement is due tomorrow, the overall expectation is for a relatively two-sided day, and we're not expecting a whole lot ahead of FOMC. There's really no major catalyst to drive the market big one way or the other. For the last few sessions, we have been bouncing in a range. Yesterday, we saw a breakout, so by default, we are giving more edge to the buy side. But we have to keep in mind that given the current context, the expectation is for a two-sided and balanced type market, so we're not looking for big directional moves, and that means that even if we break below the initial support zone, 51.5 to 53.5 could be the end of the pullback and the end of the downswing. On the upside, 73 to 75 is still intact as the key resistance area, and that's still an area where sellers can be active on first test. So in the event that you're long heading into it, it is a good idea to take profit at 73 to 75. Now, it doesn't mean that we can't break higher and go a little bit higher, but given the current context, it's unlikely that we're going to see a big directional push, and it's unlikely that we're going to see any sustained directional movement. So that applies to upside and downside. But short term, the key areas that are in play are 59 quarter, 61 quarter, and 64.5. If we can cross 64.5, then that would confirm that buyers are still dominant, and that yesterday's breakout is holding, and in that case we can go up and test 73, 75 again, and then if we continue balancing up there, or if there is some unusual strength in the market, there is still the possibility of breaking higher, but it's unlikely that it'll be a sustained breakout. So we just have to be careful on any longs that we're holding beyond 73, 75, and depending on how the market gets there, 73, 75 may even prove to be a short setup on first test. We'll just have to gauge the level of strength we're seeing in the market. So that is the context for today. So heading into the housing starts number, which is about an hour away. It's 6:30 a.m. Central Time right now, so that's still 1 hour away, and the market can still continue chopping here, but definitely keep an eye on 59 quarter, 61 quarter. That will help us establish the directional bias. If that breaks, 51.5 to 53.5 is the next key zone. Buyers can still be active, and then from there, we'll be looking for more of a two-sided move. So, in the event that we break 51 halves, then the next zone is still going to be in play and buyers can still be active there. So because of yesterday's strong upside move, responsive buyers can enter at pretty much any zone along the way, and the selling can shut off at either of these support zones. So we just have to be careful on making sure that we're not going bearish on the market right at the point where it's about to turn. So given the context, expecting balance unless there's some unusual strength or weakness on the internals and the broader market. But by default, we're going to stick with that scenario. So those are our main thoughts. Let's see where the ES opens in relation to the initial support zone and 64.5, and we'll take it from there.